Question 1. Which of the following is the most accurate method for an underwriter to assess the risk of a property insurance applicant when determining whether they should receive a standard or substandard rating? A. Relying on the applicant's credit score alone. B. Evaluating the applicant's claims history, location, and the condition of the property. C. Focusing only on the applicant's income level and occupation. D. Automatically classifying properties in high-risk locations as substandard without further review. Answer: B. Evaluating the applicant's claims history, location, and the condition of the property. Explanation: in property insurance underwriting, the key factors to assess the risk associated with an applicant are the property's characteristics, e.g., age, condition, location, its history of claims, and external environmental factors. A well-rounded risk assessment ensures that underwriting decisions are based on reliable, comprehensive data, and this helps determine whether an applicant is eligible for a standard, substandard, or preferred rating. Focusing solely on credit score or income does not provide a holistic picture of risk and can lead to improper assessments. It's critical that review the physical state of the property and relevant risk factors in the applicant's environment before finalizing decisions. Question 2. Mr. Williams, an underwriter, is reviewing a life insurance application. The applicant, who is 55 years old, has a history of smoking for over 20 years but claims to have quit 6 months ago. The applicant also reports high blood pressure, but it is well controlled with medication. Given these factors, which of the following actions should Mr. Williams take in the underwriting process? A. Accept the application as standard since the applicant has quit smoking. B. Reject the application due to the applicant's history of smoking and high blood pressure. C. Consider the application as substandard with higher premiums due to the applicant's medical history and smoking history. D. Approve the application for preferred rating based on the fact that the applicant is now non-smoker. Answer: C. Consider the application as substandard with higher premiums due to the applicant's medical history and smoking history. Explanation: in life insurance underwriting, factors such as an applicant's medical history and lifestyle choices, e.g., smoking, are crucial in determining the appropriate rating. The applicant's smoking history, even though they have quit recently, still poses an elevated risk, and therefore the underwriting process would classify applicant's health as substandard. High blood pressure, even when controlled, remains an underwriting concern, further increasing the risk. As a result, the policy would typically be rated substandard, with higher premiums reflecting the increased risk associated with the applicant's medical and lifestyle factors. Rejecting the application outright or automatically granting preferred rating would be inappropriate without further examination. Question 3, scenario-based. Mr. Thompson, a 40-year-old business owner, applies for a commercial property insurance policy for his restaurant. His property is located in an area with frequent flooding risks, and he has had 2 previous claims for water damage in the past 5 years. The restaurant building is relatively new but lacks an adequate flood prevention system. As the underwriter reviewing this application, what should be your decision? A. Approve the policy without any adjustments as the property is new. B. Accept the application with a standard policy including standard flood coverage. C. Decline the application due to the applicant's previous water damage claims. D. Offer modified policy with higher premiums and specific exclusions related to flooding. Answer: D. Offer a modified policy with higher premiums and specific exclusions related to flooding. Explanation: as an underwriter, it's essential to assess both the environmental risks, e.g. flood risks in the area, and the applicant's past claims history when making decisions. Mr. Thompson's restaurant is located in a high-risk area, and the previous claims related to water damage indicate an ongoing risk. However, declining the policy outright would be excessive since the property is relatively new. The appropriate course of action is to offer a modified policy that accounts for the increased risk by including specific exclusions or limitations on flood coverage. Additionally, higher premiums may be necessary to reflect the heightened risk due to past claims and the location of the property. This ensures that the insurer is adequately compensated for the additional risk while providing coverage to the applicant with safeguards in place. Question 4. Which of the following is not a factor typically considered when evaluating an applicant for a standard property and casualty insurance policy? A. The applicant's claims history and frequency of past claims. B. The applicant's credit score and its influence on premium rates. C. The condition of the applicant's property or business, including safety features. D. The applicant's race, gender, or religion. Answer: D. The applicant's race, gender, or religion. Explanation: underwriting decisions should not be influenced by race, gender, religion, or any other characteristics protected by anti-discrimination laws. Such factors are not legally permissible and go against ethical underwriting practices. Instead, underwriters focus on objective factors like claims history, the condition of the property, safety features, and financial responsibility, including applicant's credit score. These are legitimate risk factors that influence an insurer's decision on whether to offer coverage, what premium to charge, and whether any exclusions or limitations should apply. Discriminatory practices based on protected characteristics are prohibited under fair practices and anti-discrimination laws in insurance regulations. Question 5. Mr. Jackson, an underwriter, is reviewing an application for health insurance. The applicant, 45 years old, reports a family history of diabetes but is currently in good health with no symptoms of the condition. Mr. Jackson decides to approve the application. What is the rationale behind this decision? A family history of diabetes automatically qualifies the applicant for a substandard rating. B. The applicant's current good health and lack of symptoms are the determining factors, and family history is not significant concern. C. The applicant must undergo genetic testing to determine future risk before approval. D. The applicant's health history must be disregarded because the family history of diabetes is not a direct health issue. Underwriting. Answer: B. The applicant's current good health and lack of symptoms are the determining factors, and family history is not significant concern. Explanation: in health insurance underwriting, the applicant's current health status is the most important factor, while family history, especially of chronic conditions like diabetes, is factor considered during the underwriting process. It does not automatically lead to substandard rating or rejection. If the applicant currently in good health and shows no symptoms, this outweighs the genetic predisposition indicated by family history. Underwriters focus more on current health conditions, lifestyle, and medical examinations. Genetic testing is generally not required unless there is direct medical concern. Family history alone cannot be reason to decline or modify coverage unless the applicant's current health indicates problem. Question 6. In which of the following situations would an underwriter most likely issue a preferred risk classification for a life insurance applicant? A. An applicant who's 30 years old, non-smoker with no significant medical history and regular physical checkups. B. An applicant who's 45 years old, moderate smoker and has a history of high cholesterol. C. An applicant who is 60 years old, has a family history of cancer and is currently undergoing treatment. D. An applicant who is 50 years old with a history of heart disease but is in good health after treatment. Answer A. An applicant who is 30 years old, non-smoker with no significant medical history and regular physical checkups. Explanation: and preferred risk classification is typically issued to applicants who exhibit excellent health and low risk for developing health issues in the future. A 30-year-old non-smoker with no significant medical history and regular checkups presents a low-risk profile for the insurer, making them eligible for a rating. Factors such as age, smoking history, and overall health influence the rating decision. Applicants with risk factors like smoking, high cholesterol, or family histories of diseases are more likely to be classified as standard or substandard risks, and an applicant undergoing medical treatment would be classified as high risk. In underwriting, the goal is to assess risk and set premiums appropriately based on the likelihood of future claims. Question 7. Scenario-based. MS Lopez, a 33-year-old small business owner, applies for property insurance for her bookstore. The bookstore is located in an area known for its high rate of theft and MS. Lopez has experienced 2 theft incidents in the last 3 years. However, she has recently installed a comprehensive security system and implemented measures to prevent future incidents. As the underwriter, what action would be appropriate? A. Approve the policy with no changes, as the security system should mitigate the risk of future theft. B. Reject the application due to the previous theft incidents and the location. C. Approve the policy with a standard rating but apply an exclusion for theft-related claims. D. Offer the policy at a much higher premium due to the theft history and location with no exclusions. Answer: C. Approve the policy with a standard rating but apply an exclusion for theft-related claims. Explanation: underwriters assess risk based on both the location and the applicant's history, but they also consider risk mitigation efforts. In this case, Ms. Lopez's past theft incidents raise concerns, but her installation of security systems shows proactive steps to reduce the risk of future thefts. The appropriate response is to approve policy with standard rating, but include an exclusion related to theft to manage the risk. This ensures that the insurer is protected against future theft claims while acknowledging the applicant's effort to mitigate that risk. The policy should not be rejected outright, as the business is still operating with measures to reduce risk, and an exclusion is more appropriate adjustment. Question 8. Which of the following is a key advantage of using automation and artificial intelligence (AI) in the underwriting process? A. It eliminates the need for human underwriters, completely replacing their roles. B. It helps underwriters process applications faster, reducing turnaround time without sacrificing accuracy. C. It guarantees 100% accuracy in underwriting decisions, eliminating the possibility of human error. D. It allows underwriters to ignore critical manual checks and balances in the risk assessment process. Answer. B. It helps underwriters process applications faster, reducing turnaround time without sacrificing accuracy. Explanation. Automation and AI in underwriting serve to streamline the process, enhancing efficiency and speed. AI-driven systems can analyze large datasets and assess risk factors quickly, improving turnaround time without compromising accuracy. These systems still require human oversight and decision-making, especially for more complex cases, but they help underwriters manage and process high volumes of applications more effectively. AI does not guarantee 100% accuracy and cannot fully replace human decision-making, especially when nuanced judgment is required. Underwriters still need to review applications and apply their expertise to ensure appropriate decisions are made. Question 9. What is the primary role of an underwriter when assessing an applicant's financial situation for health insurance coverage? A. To determine if the applicant's income qualifies them for government assistance program. B. To assess the applicant's ability to pay premiums, ensuring that the insurer's financial risk is minimized. C. To collect personal information unrelated to the application for marketing purposes. D. To verify the applicant's credit score as the sole determining factor in policy approval. Answer. B. To assess the applicant's ability to pay premiums, ensuring that the insurer's financial risk is minimized. Explanation. When underwriting health insurance, the underwriter's primary responsibility is to evaluate the financial stability of the applicant to ensure they can afford the premiums and reduce the insurer's risk. This includes assessing income and financial health in general, but it does not extend to determining eligibility for government programs. Unless specifically relevant, verifying credit score is part of the process, but it is not the sole factor in determining approval, and personal information unrelated to the underwriting process should not be collected for marketing purposes. The goal is to ensure the applicant's financial situation aligns with the risk being assumed by the insurer. Question 10. What is the purpose of a coinsurance clause in a property insurance policy? A. To penalize the policyholder for overinsuring their property. B. To encourage policyholders to insure their property to a specified percentage of its value. C. To limit the insurer's liability to fixed dollar amount. D. To exclude certain types of property from coverage. Answer. B. To encourage policyholders to insure their property to a specified percentage of its value. Explanation. A coinsurance clause requires the policyholder to insure the property to a certain percentage of its value, typically 80% or more. If the policyholder fails to meet this requirement, they may face reduced claim payouts. This clause ensures adequate coverage and helps prevent underinsurance. Question 11. Which of the following is considered a moral hazard in insurance? A. A faulty electrical system in a building. B. An applicant exaggerating the value of their property. C. A property located in a high crime area. D. A building constructed with fire-resistant materials. Answer. B. An applicant exaggerating the value of their property. Explanation. Moral hazard refers to behaviors or actions by the insured that increase the risk of loss. Exaggerating property value is an example of moral hazard because it may lead to fraudulent claims. Question 12. What is the primary purpose of a deductible in an insurance policy? A. To cover administrative costs for the insurer. B. To transfer all risk to the policyholder. C. To reduce more frequent claims and lower premiums. D. To eliminate the need for underwriting. Answer C. To reduce small, frequent claims and lower premiums. Explanation: deductibles require policyholders to pay a portion of the loss before the insurer pays. This reduces the number of small claims and helps keep premiums affordable. Question 13. What is an underwriter's primary goal when evaluating new insurance application? A. To ensure the policyholder pays the maximum premium. B. To minimize risk for the insurer while providing fair coverage to the applicant. C. To deny high-risk applicants outright. D. To generate as much profit as possible for the insurer. Answer: B. To minimize risk for the insurer while providing fair coverage to the applicant. Explanation: underwriters balance the insurer's need to minimize risk with the applicant's need for fair and appropriate coverage. Question 14. In life insurance underwriting, what is the significance of a medical examination? A. It ensures the applicant qualifies for a government health subsidy. B. It verifies the applicant's identity. C. It provides comprehensive assessment of the applicant's health risk. D. It determines the policy's investment value. Correct answer: C. It provides a comprehensive assessment of the applicant's health risk. Explanation: medical exams help underwriters assess the applicant's current health and identify potential future health risks, which are crucial for determining life insurance premiums. Question 15. Which type of risk is generally uninsurable? A. Pure risk. B. Speculative risk. C. Static risk. D. Fundamental risk. Answer: B. Speculative risk. Explanation: speculative risk involves the possibility of both loss and gain. G. Investments and is typically uninsurable. Insurance focuses on pure risks, which only involve the possibility of loss. Question 16. Why might an underwriter apply a surcharge to an auto insurance policy? A. The applicant has a perfect driving record. B. The applicant drives a vehicle with advanced safety features. C. The applicant has a history of traffic violations or accidents. D. The applicant lives in a rural area. Answer: C. The applicant has a history of traffic violations or accidents. Explanation: a surcharge increases the premium to account for the higher risk associated with the applicant's driving history. Question 17. What is the difference between binding and conditional insurance coverage? A. Binding coverage is temporary, while conditional coverage depends on meeting specific requirements. B. Conditional coverage is temporary, while binding coverage is permanent. C. Binding coverage applies only to group policies. D. Conditional coverage is only offered to high-risk applicants. Answer A. Binding coverage is temporary, while conditional coverage depends on meeting specific requirements. Explanation: binding coverage provides immediate, temporary protection, while conditional coverage takes effect only after specific conditions are met, such as a completed medical exam. Question 18. Which of the following is an example of adverse selection? A. A healthy individual purchasing health insurance. B. A high-risk individual seeking insurance more often than low-risk individuals. C. A property owner installing a sprinkler system. D. An applicant paying premiums on time. Answer: B. A high-risk individual seeking insurance more often than low-risk individuals. Explanation: adverse selection occurs when individuals with higher risks are more likely to apply for insurance, potentially leading to higher claims for the insurer. Question 19. What does the term insurable interest mean in insurance? A. The applicant must benefit from the existence of the insured item. B. The applicant is guaranteed to receive a profit from a claim. C. The insurer must have a financial stake in the policy. D. The policyholder can insure any item regardless of ownership. Answer A. The applicant must benefit from the existence of the insured item. Explanation: insurable interest ensures the applicant has a legitimate financial or personal interest in the insured item, preventing moral hazard and fraud. Question 20. Why do insurers use reinsurance? A. To increase the premiums charged to policyholders. B. To share risk and reduce potential losses. C. To avoid underwriting complex policies. D. To transfer all liability to the reinsurer. Answer B. To share risk and reduce potential losses. Explanation: reinsurance allows insurers to transfer a portion of their risk to other companies, protecting them from large financial losses. Question 21. Scenario-based. Mr. Thompson, a 45-year-old self-employed contractor, applies for a commercial auto insurance policy for his work truck. The underwriting report shows that Mr. Thompson had 2 minor accidents in the past 3 years and A history of late premium payments on previous policies. How should the underwriter classify his risk? A. Preferred risk. B. Standard risk. C. Substandard risk. D. Declined risk. Answer: C. Substandard risk. Explanation: underwriters categorize risks into preferred, standard, substandard, or declined. Preferred risk: applicants with excellent driving records and low risk of loss, standard risk; applicants with average risk profiles, substandard risk; applicants with higher than average risk due to factors such as accidents or late payments, decline risk; applicants with unacceptable levels of risk. Mr. Thompson's history of accidents and payments makes him a substandard risk. Question 22. Which of the following factors is least likely to impact the premium rate for a homeowner's insurance policy? A. The proximity of the home to a fire station. B. The credit score of the applicant. C. The value of the home's contents. D. The applicant's health history. Answer: D. The applicant's health history. Explanation: homeowners insurance premiums are influenced by factors such as location, property value, and the insured's financial profile, e.g., credit score. Health history is not relevant in property insurance underwriting. Question 23. In Oregon, an insurance company may deny a policy application due to A. The applicant's gender, B. The applicant's credit history, C. The applicant's ethnicity, D. The applicant's religious beliefs. Answer: B. The applicant's credit history. Explanation: fair practices and anti-discrimination laws prohibit insurers from using protected characteristics, e.g., gender, ethnicity, religion, to make underwriting decisions. However, credit history is permissible and can be a factor in determining premium rates. Question 24. Which of the following best describes adverse selection? A. A large number of policyholders cancel their policies at once. B. High-risk individuals are more likely to seek insurance coverage. C. An insurer charges premiums below market rates to attract customers. D. A policyholder intentionally damages their insured property to file a claim. Answer: B. High-risk individuals are more likely to seek insurance coverage. Explanation: adverse selection occurs when people with a higher likelihood of loss, e.g., those with pre-existing conditions or risky behaviors, are more likely to apply for insurance. This can lead to financial losses for insurers if not properly managed through underwriting. Question 25. An underwriter is evaluating a policyholder who operates a high-risk business such as a fireworks manufacturing company. What action might the underwriter take to mitigate the risk? A. Offer a standard policy with no changes. B. Decline the application outright. C. Require a high premium and implement risk management measures. D. Automatically classify the business as preferred risk. Answer: C. Require higher premium and implement risk management measures. Explanation: for high-risk businesses, underwriters typically apply higher premiums and may require risk management measures such as fire suppression systems or safety protocols to reduce potential losses. Question 26. Which of the following is a physical hazard? A. An applicant's tendency to commit fraud. B. Poor maintenance of a building's electrical system. C. Policyholder's careless attitude toward risk. D. An applicant's history of late premium payments. Answer: B. Poor maintenance of a building's electrical system. Explanation: physical hazard is tangible condition that increases the likelihood of loss, such as poor maintenance. Moral hazards involve dishonesty or fraud. Morale hazards involve carelessness or indifference. Question 27. Which of the following is not a factor considered in auto insurance underwriting? A. The applicant's marital status. B. The applicant's driving record. C. The type of vehicle being insured. D. The applicant's job performance evaluations. Answer: D. The applicant's job performance evaluations. Explanation: auto insurance underwriting considers factors like the applicant's driving history, vehicle type, and marital status. Job performance evaluations are irrelevant in this context. Question 28. An insurance underwriter is reviewing a commercial property insurance application. The building is located in a flood-prone area, and the applicant did not purchase flood insurance. How might the underwriter handle this situation? A. Approve the policy as standard risk. B. Decline the application entirely. C. Offer a policy with a higher deductible and a flood exclusion. D. Classify the building as preferred risk. Answer: C. Offer a policy with a higher deductible and a flood exclusion. Explanation: when a property is located in a high-risk area, e.g. flood zone, underwriters may choose to offer coverage with exclusions or require the applicant to purchase additional coverage for those risks. Question 29. Which of the following is a key financial metric that underwriters use to assess an insurer's profitability? A. Expense ratio. B. Premium ratio. C. Loss buffer ratio. D. Coverage ratio. Answer: A. Expense ratio. Explanation: the expense ratio measures an insurer's operating expenses as a percentage of premiums earned. It's a critical indicator of the insurer's operational efficiency. Question 30. What role does predictive analytics play in modern underwriting? A. It eliminates the need for human underwriters. B. It provides instant policy approvals for all applications. C. It helps assess risk based on historical data and patterns. D. It guarantees that all claims will be approved. Answer: C. It helps assess risk based on historical data and patterns. Explanation: predictive analytics uses data and algorithms to identify patterns and predict future risk, helping underwriters make data-driven decisions. It enhances accuracy but does not replace human judgment.